But for now, let's put the last day of his presidency in perspective here. Joining me to do that is Ann Berry, a financial expert, Keith Fitz-Gerald, Fitz-Gerald Group Principal, Jonathan Hoenig, a capitalist, Pig Hedge Fund manager, much more. So, guys, we're going to be rifling through some of the major markets and some of the big performers in the stock market. And I've been reading a lot of the press about how, Donald Trump will go down as one of our worst presidents ever. I mean, obviously, it's a little too soon to judge, but I think it leaves out whether those who like or dislike the president want to acknowledge that the markets have had a very strong performance under his leadership. And looking at that, just that, Jonathan, again, I don't know how you can argue that he has been very successful lifting the NASDAQ out of 35%, S&P 67%, the Dow 56%, small stocks under the Russell 2000, 58%. And we were coming off of a bull market. Now, the president, bemoaned the slow recovery under Barack Obama, but it was a bull market, and it was years long. And he put it on steroids. Your thoughts?
Sure, and that bull market continued. The Dow, as you pointed out, Neil, went up about 56% under President Trump. But, and I'm just saying in Obama's first term, it went up about 73%. What also went up under Trump, unfortunately, as Chad alluded to, is the national debt, up about $8 trillion. And, that's a cost that isn't necessarily even reflected when it comes to the economy in the short term. To me, what's most disturbing is the damage, in my opinion, that the president did to free market capitalism under his term, Neil. I mean, these days when you talk about trade, you're accused of being a globalist, selling America out. To me, that's the real damage long term. It's not necessarily that he underperformed or outperformed Bill Clinton, which happened to underperform, but where we go long terms in terms of getting back to those principles which actually power the economy forward. For me, it's a mixed record on the president.
Ann Berry, on the trade front, that's the one thing that didn't go in the president's direction here. Now, you could blame the pandemic or all of these trade wars that were sparked up, not only with China, but even with our friends. I mean, we're going after the Canadians. We were going after Spain and Italy and a host of others. When all was said and done, the trade deficit soared regardless. And I'm wondering whether you see any of that changing.
It's interesting, and you're exactly right, Neil. Imports from China actually went up last year, despite the focus that had from the Trump administration. I think in terms of where it goes from here, it's really dependent what Biden's approach to global trade is going to be. He doesn't seem to be making statements that he wants to retract from the position of trying to protect American interests, at least philosophically. But I think the way he's going to do it is very different. Much more collaborative, a lot more focused on working with global institutions like the World Trade Organization. And so, I don't think there's a reversal necessarily in what we've seen, but I think there'll be continued momentum as the Biden administration tries to figure out long-term ways to try to continue, in fact, some of the work that was started under Trump to reassert American interests.
Keith, when we look at some of these numbers, the president was always fond of saying his predecessor benefited from a Federal Reserve that had his back and kept interest rates at essentially zero. Now, at the start of the Trump presidency, the Fed was reversing that and starting to hike rates. Then, of course, they reversed themselves, and we know what happened. So how much of this, kind of to touch on what Jonathan was saying and other factors at play here, do you credit to the Federal Reserve?
That's a very interesting question. I agree with that take. I think there's a lot of credit due to the Federal Reserve, as much as I hate to admit it, because I think it's a failed, flawed institution. But that said, I think the president did ride a wave here, and free money going forward is going to be great for the markets. Whether you like it or not, that's a different question.
So, Jonathan, taking a look at that, I remember this picking up some steam, that is the markets under President Trump, with his first move to slash regulations. The tax cuts came a little later after that, but it was in place with the slash in regulations. Now we have Joe Biden coming in, promising to undo a lot of that with executive orders of his own. Too early to tell which ones go in a Biden administration. I would imagine anything friendly to business is on the chopping block. But how does this play into your market forecast?
I mean, Neil, if you really want to stimulate the economy, it should be a continuation of President Trump's policies of deregulation, not stimulus. And, the FDA is probably, the best example. It was deregulating and cutting a lot of the red tape that allowed us even to get to the vaccines that we have today in terms of combating the virus. So we're going in, unfortunately, just the opposite direction. More spending, more government control. That's never been good for anyone of any social economic strata, and away from really what powers an economy forward, which is economic freedom that certainly Joe Biden is not putting forth.
You know, and I know this has been a bipartisan buying binge here, whether it's Democrats in charge or Republicans in charge, where the deficits grow each year. Now, this is an off the charts past year we just got through with $3.5 trillion deficits. I mean, that used to be the total debt not too long ago. But it brings us to that roughly almost $22 trillion in total debt. And it grows, no matter who's president, by more than $1 trillion a year. The pandemic, I know, a unique situation. But having said that, I'm just wondering, as we look at these figures, actually better than $27.8 trillion, where you see this going. I know we keep kicking the proverbial can down the road. So if markets are worried about it, they're not showing that. Are you?
I think it's going to be really important to see what this administration continues to invest in. And one of the key things, Neil, is what has that deficit gone towards funding? And there were certain key areas that it was so important to see investment in at the federal level in particular, to try to stimulate some of the drivers of future growth and future productivity so that the revenue base can actually come in over time to start paying that down. It's going to be critically important to see what Janet Yellen does with Biden around the long talked about infrastructure improvements for the nation to continue to help productivity. It's going to be important to see what investment is made in a labor force to help to educate and train folks, particularly those displaced through the pandemic, to make sure that there is a path to seeing some of the underlying growth that ultimately will help to try to pay some of that deficit off without seeing a huge hike in tax rates. So I think seeing what fiscal spending is going to be directed towards and how that drives growth is really key to understanding ultimately what the stock market response to this is going to be.
You know, Keith, I think something that's morphed in the years is the definition of stimulus. It used to be, at least in the Republican sense, cut taxes, that's your stimulus, and that'll boost the economy, and away we go. Now, Wall Street is celebrating because more stimulus is coming, actually, with a lot of spending, and that's just fine. But I'm just wondering whether there's a limit to that, and whether this notion of whether it's a $2 trillion, almost $2 trillion COVID stimulus plan, another environmental package that could cost trillions when all is said and done, whether, all right, stimulus is one thing, and going into hock to get it is quite another.
You know, that's a key point, because we seem to confuse having a plan with actually doing something about it. I mean, what happened to the people in all of this? That's the thing that, excuse me, absolutely enrages me, because real stimulus is about the creation of economic freedom to grow an economy, not necessarily because somebody's going to spend their way into it. You can't spend your way out of debt any more than you can spend your way into growth. So I think what you've got to do is you've got to create an environment that helps all of those that have been left behind. That's the one time I've actually agreed with Janet Yellen, help those who have struggled the longest. But you've got to also create the environment where free markets flourish. That's the way you actually grow something. Forget about all this stimulus nonsense. Let's get the self-absorbed leaders in Washington to actually get the right checkbook out, not just a checkbook at random and throw money at this. Let's grow it.
Jonathan, I'd be remiss if I didn't mention technology. It had an incredible run. It carried this bull market to new highs. Apple up 325%. Under this president, Microsoft sort of 41%. Yet, if you take a look at all the technology chieftains and all, they're no big personal fans of Donald Trump, but obviously he did a lot to cut their taxes, ease, a lot of burdens on them. Will they have as big a friend in the White House, do you think, under Joe Biden, who's raising their tax rates and limiting some of the things that they've enjoyed under this one?
Raising their tax rates, Neil, and also continuing on the president's policies of, unfortunately, going after them, politically. I think the biggest risk to technology, which, in many ways has saved us. What would life under the pandemic have been without Facebook, Amazon, Netflix, all these amazing technology companies? And Neil, they're hated not just by the president and a lot of his supporters, but by those on the left as well. And those two, in my opinion, evil words, antitrust, they're going to come back under the Biden administration to haunt a lot of these big tech companies. Microsoft comes to mind in the early 2000s. It hindered that stock for better part of a decade, and that's my fear going forward. If you chop the legs out under the technology sector, you chop the legs out under the market and under the economy writ large. That's a risk.
And finally, the market has its own celebrated presidents. Loved Ronald Reagan, loved Bill Clinton. Looking at some of these numbers we were sort of rifling through today, in retrospect, if not now, will it remember and love Donald Trump?
I think it will remember the volatility. And I think the love level is going to be dependent on how Biden takes what he's inherited and continues to make sure that positive momentum stays.
That is a very cautious answer. Touche. Touche. No politics there. All right, guys, thank you all very, very much. Here we wrap up again. This is the last full trading day for Donald Trump, but it has been an amazing 4-year ride in the markets.